So we're going to assess our New Zealand US dollar trade that we entered about a week ago. I'll just draw out the support and resistance Fibonacci and go through the 5 pillar approach of what we use to enter the trade. So we'll plot out our support and resistance, which is right here in this area. Then we'll take the Fibonacci, so its highest point out of this range. Then we'll take it right down to the bottom. And as you can see, support and resistance is around that 61.8 level. So what happened was we're now trading on the downside of the 20-day moving average. So it looks like we could be trending downwards. Long-term fundamentals, we were looking at RBN. So the OCR, or the interest rate, Reserve Bank interest rate, is sitting at 3.5%, which is actually quite high, but in my view it's quite high compared to the data is actually starting to become a bit negative. So as we can see, we're seeing this sell off and the market's been a little bit unsure, so we could still see another push up to the upside, but right now we're bearish. Today, in regards to this bearish candle here we have, that's still trading on the downside of the 20-day moving average, unemployment came in higher than expected. So in economics, what that means is that the economy's amount of unemployed people is rising. Therefore, there hasn't been a stimulation in job creation. And the RBNZ have already made comments that if there's room to move interest rates, depending on data. So we're looking at some negative data. So we could could be looking at getting that push right to the downside. I'll probably, most likely, we entered at this level here, right here to the downside when we broke the bottom of this candle. So now we're trading to the downside. We'll be taking, to be honest, on very long term. I would like to stay very long term, whether it's a few weeks to 6 months, just because I've been following the New Zealand economy and it has been underperforming but the data hasn't been convincing enough for them to cut rates yet, but I believe in the near future we're going to see a rate cut in New Zealand. And then we also have on the other side the US dollar, the speculation about the first rate rise since 2008 in America. So, that's also going to put downward pressure on the New Zealand dollar. So what we're going to do is we're going to follow this trade, and we're just going to follow it downwards. Any questions that you may have, please post in the comments. If you are not sure about what I was relating to with the 5-pillar approach, you'll also find in the description videos explaining how we attack trades.